Good morning and welcome back to Almus Market Mornings. The conflict in Iran still remains at the forefront, though the focus is now slowly shifting from what's being bombed to what kind of allowances are being made. For example, if any ship carrying energy products passes through Hormuz, that's boosting a bit of risk sentiment. And of course, it's quite natural after a point of time. More than the bombings itself, investors focus on the acts of normalization. As of now, we may still be far from it. US asking countries to join in to secure Hormuz. They also have delayed their summit with China on account of the war. But it seems they are also quite positive on Iran's reduced capabilities. Broadly, the dollar index still trading close to multi-month highs, but it's to be seen whether we see a bigger move from there. Good morning, JK. Do you think we may see a break higher in the dollar index in the coming few weeks? What's your take?
Good morning, Swaraj. I think the answer to this will be available in a couple of days after the Fed meeting. If Fed, who have been somewhat neutral in their stance so far, if they sound hawkish, based on the recent inflationary trend as well as the expected inflationary trend from the oil prices, that is when we really expect the dollar trend to emerge. But as of now, the bias remains to be on the positive side for the dollar, unless the situation becomes more benign and the war seems kind of ending or de-escalating with the oil flow freely allowed. But that is not the situation right now. In fact, President's efforts to enlist support of other nations, mainly Europe, to join the mission to protect and help ships pass through the Hormuz Strait has had little success, if any at all. And there has been categorical refusal by Germany and UK to be drawn into the war. Germany rejected, saying this is not our war, we did not start it. And this clearly indicates that these countries are already seeing this war as having no popular support, and their involvement will make them politically weak, in their own country. The other angle is that Iran has made a statement that countries that are not militarily involved in the conflict are allowed to have their ships sail through, though with their military approval. So it means countries who are not involved in the war are not going to be drawn into it, for the time being, or maybe for ever. Meanwhile, Iran has started letting more tankers through Hormuz, including some for India and China. And we believe the reason that Iran seemingly softened is the threat that Trump has made out, that US and Israel could easily destroy all of Iran's oil export infrastructure, which will cripple the nation and its only real source of revenue. They took out all military and security in Kag Island, as we also detailed in yesterday's update. But so far left the oil export infrastructure unaffected. But we think, regarding the boots on the ground stories, that's where some of the marine special forces are actually headed. So the threat is there for Iran as well. So they might be softening the stand on this as well. However, if normalization does not happen in a few weeks on the passage of ships, we could be starting a much higher tension in the region, as well as higher crude prices as well. Now, markets have reacted positively to some relaxation in the oil passage yesterday. And in fact, oil prices did react a bit lower as well, falling almost 3%. But since then, there is, sort of retracement back to higher levels. Brent is now trading above 103 now. In fact, quite, uneasy development is that even the Gulf states, who have been neutral and who have been hit by Iranian drones and missiles, not just the US bases, but even some of the civilian areas, they are also now in a position where they don't want any further threat from Iran, and they probably, don't want US to stop this until it reaches a logical end and there is no further threat from Iran. Well, they are not directly joining the war. I think now their stance is somewhat more open now compared to earlier. That's a very difficult or an unknowing situation because if they do join or if they support in some way or the other, then it could become a slightly wider war. So I think the war situation is still very much open. And we have to see how things move forward. There is every reason from US perspective, now that he has not enlisted the support of European countries, now for him to continue more aggressively until Iran yields. So there is no real progress on any sort of negotiations or ceasefire talks that is going on. So therefore, I don't think markets recovery is very tentative and possibly, some sort of a short covering, including in Indian market. In fact, a lot of recovery was led by the tech sector. Now it seems to be, again in the focus as somewhat immune from the oil price hike for the time being. So that led the recovery. We'll have to wait and see really if this happens. So to answer your question, whether the dollar will, further rise, I think it's still the open question, although the bias is currently looking at the charts as well as the news flow. I think there is every possibility that this resistance at 100.30 will be crossed. And, Japanese yen also plays a big part in this, because if Bank of Japan does not intervene at 160, which is very close by, then we are looking at much higher level for the USDN, and that could drag the USD index also clearly higher. There was positive reaction in India as well. Rupee somewhat gained about 10-15 paisa. Once again, it's not just by the news flow, but also because the national banks were active at a higher level. We had this trade number yesterday where the deficit on the merchandise came down by about 7 billion in the month of February compared to January. Clearly, there is, fall in the goods deficit over January, and the deficit, overall deficit is also reduced because the exports, net exports on services has also been quite steady. However, what is notable is that the exports have remained almost stagnant near 37 billion, on the goods side, and net exports on the services side have actually been slightly lower. So also notable is that there is every possibility of our import bill rising further. As we all know, as war extends and crude prices remain higher. In any case, even if the war kind of de-escalates a bit, experts agree that the oil price is now having 80, which is equivalent of 60 earlier. That straight away puts about 20 to 30% higher on our import bill. In fact, our imports have recorded at 20.6% increase in value terms from April to January. So that's a very big number. And while exports have not have taken only a marginal rise. Overall, I think the trade picture is not going to improve on a sustainable basis. Only the fall from January to February coming only due to the gold imports, which was very high during January, and that is not there. Let's also remember that we have had huge commitments on the defense imports, and those will also add to our trade deficit. So we are in a situation where Rupee is not likely to see any sustainable gains immediately, with all the news around and the structural of the foreign exchange outflow and inflow for India. In fact, the outflow from FIS have continued. Yesterday also a large outflow. Now for the month, of course, we are crossing more than 8.5 billion from the equities alone. So we are looking now. Market may take a pause and be on the sidelines because it's a super central bank week with major central bank decisions are likely, like Bank of Japan, Bank of England, ECB, Fed, Bank of Canada, and Swiss National Bank. All of these all of these central banks are expected to stay unchanged. While Australia, who is meeting today, likely to hike by a quarter percent because their inflation is already much higher. They have been holding their rates lower for much longer time. That, of course, has been discounted by the market. But I think, as usual, and more particularly this month, we are looking at what the central banks have to say about what is likely in the future stance as far as the monetary policy is concerned. And it is also significant that Powell's chairing the meeting this time will be his last, because the next meeting probably he's going to be chaired by the new chairman. Our own RBI will be meeting on April 6th in the new financial year, by which time hopefully more clarity will be available on the war situation. Perhaps some easing will be available on the conflict as well. So finally, if someone wanted to hear something different, Trump said yesterday that Fed should call an urgent special meeting and cut rates. So don't forget Trump. Thank you.
Thank you, Jack. And yeah, I think I think quite a few developments coming in from his Twitter account. I think that's what generally market participants have been following, and such a change it's been. Like people going out of their Bloomberg terminals to now watching Twitter the entire day to see the fresh updates. So that's the kind of world we are living in right now.
Definitely. Yes. Yeah.
Yep. So apart from that, we have a major central bank week because we have got meetings by Australia, Switzerland, Fed, ECB, BOJ. Australia likely to hike while the rest are expected to keep rates unchanged. More or less, dollar index looks like it may strengthen further. Even the rupee on the domestic side, on the rupee gained 10-15 paisa, the underlying factors still remain unchanged. Uh, Even though our trade deficit was lower by about $7 billion as compared to Jan, the net exports have been stagnating, and now because of the war and the rising oil price, that puts a risk on our merchandise import bill rising. So any sustainable gain as of now looks unlikely. We are also seeing continuous FII outflows for the month of March. It's already touched $8.5 billion for equities. So that's again a tailwind. So that's again a headwind for any sort of a rupee gain. That's it from Australia. Thanks for listening. We will catch up tomorrow with a fresh round of updates.